Hello, guys. Kindly confirm you can hear me. Good morning, guys. Good morning. Good morning, everyone. Kindly confirm if you can hear me. Can anyone hear me? Okay, great. If you can hear me, drop it in the chat. If you can hear me, drop it in the chat. Oh, great, great, great. Okay. Oh, great, 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 great. Okay, let's wait for others to join. Let's wait for others to join. All right. So we'll commence exactly 9:15. Let's give room for others to join us. We'll commence exactly 9:15. Stay active, guys. Kindly confirm if you can see my screen. Kindly confirm in the chat. Kindly confirm if you can see my screen. If you can hear me, please confirm if you can see my screen. Oh, great, 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 great. All right, guys. So it's 9:15 already. I think let's get started. Okay. So yeah. Good morning, everyone, and welcome to T Billion Forex Academy. If you're new here, my name is Timothy, aka T Billion, and this is our weekly live market analysis and trading session. Okay, where we break down the forex market step by step in a very, practical and well structured way. Okay, so this session will be holding every Monday and Wednesday by 9:00 a.m. West African time. Okay, that is 9 a.m. West African time, and our primary focus will be XAUUSD, which is gold. As you all know, I trade gold and gold only. Okay, although there will be room for you to request other forex pairs you want me to analyze, which I'll be more than happy to do. Okay. Now, for the information, this the goal of this session is to shape and sharpen your understanding of the smart money concepts, which we all know as SMC, okay, including other blocks, market structure, liquidity zones, and price action. Okay, how you can properly read market structure, identify key order block zones and liquidity areas. Okay, and of course, most importantly, how you can apply them in a real market situation or in a real market condition. Okay, that is the essence and that is the goal of this session. So please stay glued. If you're a beginner or an intermediate trader, trust me, stay active, stay with me because everything we are going to do here follows a clear top-down analysis process. Okay, so we're going to take it from the top, the higher time frame perspective, and down, to the lower time frame bias. All right, so just stay active and stay with me. Let's get started. Are we ready? If you're ready, please drop one in the chat. If you're ready, please drop one in the chat. I'll proceed when I see one in the chat. Please drop one in the chat if you're active. If you're ready for this session, drop one in the chat. Drop one in the chat. Drop one in the chat if you're ready for this session. Drop one in the chat. Drop one in the chat. Great, 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 great. I want to see more response in the chat. So drop one in the chat. Drop one in the chat. Drop one. Let's dive into this properly. Great, 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 great. More, more, more. I need more. Just want to be sure I'm not alone. Great. All right. So yes. So let's get right into this. First and foremost, we are going to do our top-down analysis process. Right. We're going to begin from the daily time frame because that is where institutions make decisions. Okay. So we're going to be starting from the higher time frame, which is the daily time frame. Okay, on the daily time frame, what we are going to focus on is structure. Are you with me? We're going to focus on structure on the daily time frame. Okay, one thing I like to ask myself is, okay, for the information, this is the time frame we are trading. Okay, we are trading the following time frame: the 1 day time frame, the daily time frame rather, the 4H time frame. Let me put that here in the charts. So these are the time frame we trade. That is time frame we trade. So we trade the daily time frame. We trade 4 hour, the 4 hour time frame, the 2 hour time frame, 1 hour time frame, 30 minutes time frame, 15 minutes time frame, 5 minutes time frame for our entry. Okay. So these are the time frame we trade. Sometimes I, you know, drop down further to 3 minutes and even 1 minute, as the case may be. But for this, please, I'll take out 1 and 3 minutes. Okay, this is what we'll be working with for this session. However, if the market gives us reasons to drop down further to probably 3 minutes or 1 minute, then I'll definitely do that and give you my reasons as to why. Um, all right, so let's move on. Again, we are going to begin our top-down analysis from the daily time frame. Okay. All right. Okay. Yeah, it's visible. Okay. All right. So just to say this, please, this is my very first live session. Okay. So please, you might notice some frictions in the process. Please pardon me. Okay. This is my very first live stream. So please pardon me if you notice any friction. All right. So let's move on. So we head to the daily time frame. We head to the daily time frame. On the daily time frame, what are we looking out for? Structure first, as earlier said. Okay, we want to understand the overall trend of the market, right? This is what I like to ask myself, in order to give me a better perspective or understanding of the current market structure, the current market trend. Okay, I ask myself that what is the market doing at the moment? That's on the daily time frame. What is the market doing? Are we making higher highs and higher lows, or lower highs and lower lows? That is the first question you want to ask yourself So looking at this market, obviously the market is making a series of higher highs and higher lows. If you look at this, you would see that the market is making higher highs, higher lows, higher highs, higher lows. It's about to create a new higher high here, right? Okay. So now this has given me, an understanding of where the market, or probably the current market trend, right? So obviously the market is bullish, right? Now, having identified that, the next thing I want to do is to start looking for buy opportunity because the market is bullish, right? So I want to ride on the trend. I don't want to go against the trend. I want to ride on with the trend. So the market is bullish. So I want to look for buy opportunity. All right. So that is not to say I won't take sell opportunity if I see one. However, if I'm going to take a sell opportunity, right, I'll be very, very conservative with my TP, right? I'll be very, very conservative with my TP, and there's some certain factor that must be met in order for me to take, a sell opportunity in the bullish market and vice versa. Do you understand that? So let's start marking out our zones. We've been able to identify the market trend, which is bullish. The market is bullish. So market is bullish. Market is bullish. Trend. The market trend is bullish. Right. So the next thing I want to do is to start marking out. Next thing I want to do rather is to identify the most recent break of structure. Right. I want to start marking out my zones. Mark out the zones. Mark out the zones. Right. So I want to start marking out my zone. And on the daily time frame, what I want to do, is I want to identify the most recent break of structure or the most recent market shift. Again, we're identifying the most recent break of structure or the most recent market shift. Now, if you look at this chart, here we have the most recent break of structure, which is this. This is the most recent. This is the most recent break of structure. Okay. So I'll just mark it as BOS, right? Now I have this. Then the next thing you want to do is to identify the zone, the order block zone that led to this break of structure. Some people call it origin. Okay, the origin that led to this break of structure. Now, if you look at it, this is the swing level. That is the origin that led to this break of structure, right? Now, for my students, you already know how to mark out your order block zone. You already know the factors that must be met in order for a zone to be considered a valid order block zone, right? So you already know those things. But just for the newbies who are here, okay, just for those who are joining us for the very first time, okay, I'm going to give a recap on the factors to be considered before an order block zone can be considered valid. Okay, and one of those factors includes a gap, right? Let me take a note of that here. Okay, valid order blocks, valid order block zone. One, there must be a gap. A gap must be present, which we call the fair value gap, FVG. It is also called, you can call it an imbalance, right? Two, there must be a break of structure, BOS. There must be a break of structure. Please confirm if you can see my text. All right, all right. Okay. So there must be a break of structure, right? Thirdly, it must be unmitigated. That is, the zone must be the zone must be fresh. Price, it must be a zone that price has not tapped into. Okay, that's a valid order block zone. And one thing a lot of persons usually missed out for a valid order block zone is the pivot candle. Okay, so the pivot candle must close below or above the previous candle, above the previous candle. Okay, so this is the factor or the rules of a valid order block. The rules of a valid order block or a valid order block zone. All right, so this is it. Please take note of this, very important. Okay, so any zone that does not meet these four rules or criteria, okay, will not be considered as a valid order block. All right, so let's move on to marking out our order block zone. So on the daily time frame, we've marked out the most recent break of structure, which is this. The origin or zone that led to the break of structure is this. I mean, this is the swing level that led to the break of structure, or the order block zone that leads to the break of structure. This is it. This right here. Okay. Um, all right. So that is it. Now, okay. So next we're going to drill down to the daily time frame. We're going to drill down to the 4-hour time frame. Okay. To refine our zone. So when we drill down, we drop down to the 4-hour time frame. Okay. Let's refine the zone drawn from the daily time frame and mark out new order block zone on the 4-hour time frame. All right, so this, okay, so let's look out for, yes, this is an order block zone, right? But then I'll mark it out. But I'm only interested in the most recent order block zone because, of course, price may not get to this place anytime soon. Okay, but then let's just put it there. This is also a valid order block zone. As you can see, it meets the criteria for a valid order block zone, right? So it's a valid, you can see the bullish momentum candle, then the break of structure. In this case, this is a market shift of this internal pullback. Okay, so this is more of a market shift than a break of structure. Okay, so there's a market shift at this point. Okay, so there's a market shift MS, right? Then this is the origin or the order block zone that leads to this. And of course, we have our fair value gap here. We have our fair value gap here, which is this, right? Mark your fair value gap, FVG. Okay, but like I said, I don't want to wait for price. I will just keep this here of course, for reference purpose, I am more interested in the most recent zone, which is this. So we've been able to mark this from the daily time frame. Coming down to the 4 hour time frame, right? We have this. This is our break of structure. This break of structure. Here is right, and okay, we have a zone here. There's a 4 hour zone, right? There's a 4 hour zone. All right, so I can also see another zone here on the 4 hour time frame. Okay, again, look at it. It's again met the four criteria of a valid order block zone. Let's look at it closely. So this is our order block zone. Okay, now let's look at this. One, it has a momentum candle, right? And there is a fair value gap right here, which is this, a very small fair value gap, right? There's a fair value gap, FVG, right? So this is a valid order block zone and it is unmitigated, like you can see. Price has not tapped into the zone. So it's still very fresh and would also expect price to get to that zone as well. All right, so there is another zone. Again, we have the bullish momentum candle and the presence of a fair value gap, which is this, is a fair value gap here. Okay, fair value gap. So again, it met the criteria of a valid order block zone. All right. So let me keep this here and wait for price. MVG. Let's keep this for reference. Again, I'm more interested in the most recent zone where price could potentially, retest. Um, okay, so I think this is the only zone I can see on the 4H time frame. Okay, there is another zone here. This is also a zone. Met all the four criteria for a valid order block zone. This this is the fair value gap all the way, the gap in between the candle before and the candle after the impulsive candle. So that gap in between is what we call the FVG. This is my FVG. All right. So now I have this. So that is all the zones I can see on the 4H time frame, right? So let's continue. We'll drop down to let's drop down to the 2H time frame to further refine the zone. Okay. Let's keep this guy here. Very much interested in the recent zones only. All right. Okay, now on the 2H time, where is our order block zone? Please, are we following? Are we following? Is it making sense? Oh, Johnson, I think you probably want to check your internet. Please Kindly confirm if you can still see my screen. Johnson said his screen is blank. Kindly confirm if you can still see my screen, please. Please confirm if you can still see my screen. Johnson said blank. I want to believe that is internet. Kindly confirm if you can see my screen. Kindly confirm to see my screen. I'm waiting. I need the confirmation to proceed. Confirm if you can still see my screen. All right. So, okay. Good, good, good. Mr. Johnson, so I want to believe you need to check your internet. Others are able to see my screen. So I want to believe it's an issue with your internet, or probably you want to leave the live and join again. Okay. All right. Cool, cool, cool. Thanks for the confirmation. All right. So let's proceed. Okay. Now we're on the 2 hour time frame. Um, this is my order block. Okay. This is my order block zone. From the 2 hour perspective, this is my order block zone. Okay. And you can see we have this break of to the upside, right? Okay. All right. So we have this. So that is all I can see on the 2H time frame. Let's drop down further to the 1 hour time frame. So on the 1 hour time frame, again, we want to identify more order block zones and also refine a time frame perspective. Okay, so yeah, uh, okay, we're still riding on the 2H time frame, which is this. Okay, it aligns with the 2H time frame, so we are good with that. Okay, I can see another order block zone here. Please, marking out the zone is really easy. Okay, I think I've briefed on that, but then if needed, I can create a separate video on order blocks. So this is it. So this is my 1 hour order block zone. This is the origin that led to this break of structure from the 1 hour bias or perspective. Okay. Again, it met all of the criteria for a valid order block zone. The presence of an FVG. This is the FVG, the gap between the previous candle before the momentum candle and the gap between the previous candle before the momentum candle and the candle after the momentum candle. That is our FVG. So yes, there is a presence of FVG, making this zone a valid order block zone. Okay. All right. Let's move down to, I think that is all on 1H. Yeah, that's all on 1H. Okay, so let's drill down to the 30-minute time frame to further refine our zone and identify other zones. Okay, bring this guy a little closer, this guy a little closer. Right, all right, good. Okay, okay, so on the 30-minute time frame, okay, I can see we can further refine this zone to this. Okay, this is the candle before the bullish momentum candle. All right, and our FVG, let's bring it down a little to fill up this gap. All right, cool. Okay, let's refine this to properly mark the zone, which is this. Perfect. So this is our FVG zone. Let me bring this one a little bit closer. Perfect. All right, so this, all right, so from the 30-minute perspective, this is our order block, right? And of course, there is a zone here. From the 30-minute perspective, this is a zone, okay? Zone is another block zone. Sorry. Okay, we have our FVG, which, all right, okay. So this, all right. Okay, so again, we've been able to mark out our other block zones on the 30-minute time. Okay, now let's drill down to a 15 minutes time frame to further refine our zone. All right, so this is it. Let's refine it to this candle, the candle before the impulsive move, this one. Okay, good. And the fair value gap, refine it further to this and fill up this gap. Yep. Okay. So from the 15-minute perspective, this is our order block zone. Okay, and for this rare zone, this is our order block zone. Okay. So this is it. All right. Okay. Okay. So now we've marked out block zone. Now the last time frame, which is the 5-minute time frame. Now this time frame is our entry time frame. The 5-minute time frame is our entry time frame. Okay. The 5-minute time frame is our entry time frame. All right, so on the 5-minute time frame, you can also mark out the 5 minutes order block. So we have this. I'm just refining the zone we've previously drawn from the higher time frame zones. Okay, so I'm refining. So refine this further to this FVG. Okay, and this, let's refine it further to this. Okay, let me move my FVG a little so it doesn't take too much space. Okay, so the zone can sit here. So for this, I will push this here for reference. Okay, because obviously price might not get to that zone anytime soon. Okay, so let me just put it here for reference. Okay, these are the zones I'm interested in. These are the zones I'm interested in. This, and of course this too, because this is an extreme zone, and usually price, respects extreme zones. You don't want to take them out. You don't want to ignore extreme zones. When I have zones like this, when I have zones like this, if I'm taking a trade here, please take notes. This is very important. Pay attention to this. Extreme zones and the normal zones. Okay. When you have two zones that are very close to each other like this, or like this very one that I minimized, let me maximize it again. This one. If you have a zone like this, you know, the probability, their probability varies, right? They do not have the same probability. Now, the zone with the highest probability is this rear zone. The zone with the highest probability is this rear zone. Okay. Any trade you're taking at this zone or this zone, you should be very, very conservative with your TP. Be very, very conservative with your TP. If I'm taking a trade right here, for example, if I'm going to take a trade, where's my position two, my long position two? Okay. Of course, my SL will be here, just slightly below the swing low. This is a swing low. So you can mark this out with your horizontal line tool like this. This is the swing low. So your SL should be slightly below it. Okay. Then your TP for this zone can be at the next, swing high. You can just target this. Okay. This is your TP. Right. This is your TP. Again, your TP should be at the next swing level. In this case, this is our next swing level. So this is where I expect to take my TP. Can push price. Yeah, that is it. This is where your TP should be. However, because there is a zone, below this zone, we have two zones below this zone. Trust me, once I get to 50% of my trade here, I'll either break even or take partials. Again, when price moves 50%, because price might do something like this. Price might do this. Price might do this. Sorry. So price might do something like this. Excuse me. Price might do something like this, right? And tap into the zone. Then create an inducement, right? Down to this zone. Do you get it? So to just create an inducement here, in order for it to create a sort of liquidity zone, okay? Create a sort of liquidity zone, like this. Create a sort of liquidity zone around this level. Of course, retail traders who are taking trade at this level would most likely have their SL around this level, just like I have it here. Some might place it here, or even right here. Okay. So all of this are liquidity zone for price to just, you know, tap into, strip available liquidity, then go to the rear order block zones before it makes the main move. Okay, so once price taps this, it can create another inducement, and finally comes to the rear zone, and this is where you want to take your trades without hesitation. The probability of this zone holding is very, very high, and if you're targeting this zone, okay, considering the fact that um considering the fact that the overall trend is bullish, right? If you're targeting this zone, your TP can be as much as this. So your TP can be as much as this. You can target this price level. You can target this price level as your TP. Then don't forget that your SL, always place your SL slightly below the swing low, which is this, or you can even put it here. When I have double levels like this, I just put it at the rear one. Again, price, respect the rear zones a lot. Okay, so I'll put it at the rear zone here. Then move my SL a little bit to this point. Now, why am I doing this? Because my rule states that if price breaks below this level, right? If price breaks below this level and it respects the level that is a candle close below this level, then the order block zone has been invalidated, right? So if price take me out of this, it only means the zone has been invalidated and price might most likely continue to go, downward. Okay. So again, when you're taking your trade at the normal zone, that is the zones before the real zone, be conservative with your take profits. Be conservative, don't be too ambitious, right? But then when you're taking at the real zone, of course, you can be as ambitious as I am here, targeting this price level for my TP. Okay, is that clear? Are we together or separated? Please kindly confirm if we are together or separated before we move into our entry confirmation and execution. Kindly confirm if this is clear up to this point before we move to our entry confirmation. Kindly confirm, are we together or separated? Confirm if we are together up to this point. Before we move to our entry confirmation. Please confirm, 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 confirm. Confirm if you understand the whole flow up to this point. All right, so this session is supposed to last for an hour. Okay, it's supposed to last for an hour. All right, so let's move on to our entry confirmation. Let's move on to how we enter our trade. Because it is one thing to marking out your order block zone out. So in my opinion, is very easy. It's a piece of cake. Actually, anybody can, do that, right? But actually taking the trade when price gets to that zone is the most difficult thing to do, because a lot of that's where psychology comes into play. That's where your emotions, might set in for those who don't know how to manage their emotions yet. We don't have the right psychology. trade the market profitably, you know. So, great, 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 great. All right. So now, like I told you, my entry time, entry time frame is 5 minutes, right? My entry time frame is 5 minutes. Let me take these guys out for now. My entry time frame is 5 minutes. Okay. So now on the 5 minute time frame, okay, so this is where patience, this is where this is where patience separates, professionals from gamblers, right? It's all about being patient. You wait for price to come to your zone. You wait for price to come into your point of interest, right? Before you execute. Now, there are two ways you can take your entry when price gets to your point of interest, right? One, I have two entry model that I use, and I will tell you when I use each of these entry models, right? Entry model. So I have the confirmation entry, and I have the risk entry, right? These are the two entry model I used when price gets to my point of interest. Now, what does this mean? The confirmation entry, okay, the confirmation entry, or let's talk about the risk entry first. The risk entry is simply just setting a pending order. Yeah, you go to your MT5, you set a pending order here at this price level, which is this 4543. You set a pending order there, right? Could be a buy limit order. Yeah, you set the buy limit order there. So the moment price like this, you set the buy limit order, you set your SL, which is slightly below the last time swing level. Okay, you set your SL there, then you set your TP, right? Now, price gets the moment price gets to your buy limit, okay, the moment price gets to this price level, your buy limit order is triggered by your broker. Your broker trigger your buy limit, then your trade is executed, right? That is the risk entry. That is the risk entry. You just set a buy limit order at the zone, price taps into the order, execute your trade. That is risk entry. Now, for confirmation entry, you don't do that. For confirmation entry, you don't do that. What you do is you wait for confirmation. And what is the confirmation? A market shift. The confirmation is a what? You wait for a market shift either on the 5 minute time frame or on the 3 minute time frame. Okay. Now, this is what I mean by market shift. Of course, my student knows this. Okay. But just for it, let's say, for example, I have marked out my zone just like we have it, and price moves, you know, like this, like this, like this, like this, tap into my zone. Now, I won't take this trade just yet, right? I'll wait for price to do this. I'll wait for price to do this. Now, this is the market shift on the 5 minute time frame, right? Now, once I have this market shift like this, MS, okay, I'll mark out the order block. I'll mark out the order block probably in 3 minutes or even 1 minute time frame, or even in 5 minute time frame itself. I'll mark out the order block, okay, that led to this market shift, right? Then patiently wait for price to tap into the order block. Then at this point in time, I can, you know, take my trade, then put my SL here, or get this level here. Okay, you can put your SL here, or you bring it down here. Okay, that is it. This is confirmation entry in a very nutshell. Okay, this is confirmation entry. You wait for that market shift first, then mark out the zone that leads to the shift, wait for price to retest the zone on the formation of a bullish candle in this case, okay, or when you get some reaction, of course, you analyze your study price action around the zone before you take your entry. All right, probably when I probably create a video on other blocks to properly explain how I use confirmation entry, because there are some other price action, that you need to confirm that must be present rather in order for you to take the trade when price we test the other block that leads to the market shift. Okay, so I think that is it for today. So please take note of these zones, take note of these zones in your chart. Okay, let's wait patiently for market to get to this zone before we execute. Now I'm going to share the coordinates for each of these zones on my Telegram channel. So if you're not there on the channel, I'll share the coordinates for all of these zones that I've marked out. Okay, and when price gets to the zones, right there, I'll notify us and tell us whether or not to take the trade. So if you're not there, please kindly join. So for this, let me put my position tool on this as well. Okay, so we have this guy here. Target this and it's my SLDM. Okay, and for this, okay, so for this, we have this one position. Okay, we press our SLDM and target this. All right, so I'll share the coordinates for this trade on my signal channel. I'll share the screenshot of this, including the coordinates on my signal channel. If you're not there yet, please join so you can be informed when we're executing our trade. Okay. All right. So I think that is it for today. I don't think we'll be able to take PS for analysis. Okay. So in our next session, we're going to do that. But then maybe I can just take one pair if there is. Let me see. Oh, great, 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 great. Great, guys. All right. So, if you have any pair you want me to analyze, I'm going to be taking only one pair. Okay, I'm going to be taking only one pair. If you have any pair you want me to analyze, let's make this interactive. If you have any pair you want me to analyze, just one, I am going to be doing that for you. Okay, just one pair. Otherwise, we can end this session. Kindly state, kindly request, what's it called? Kindly share the pair you want me to analyze, just one pair. Okay, if there is any, we can go ahead and analyze it. Otherwise, we call it a day. Just one pair. We've run out of time already. This session is supposed to last for 1 hour. Just one pair. If you have any, drop it in the chat. We'll just do a quick top-down analysis and mark out the most recent order block zone, and that's it. Great, 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 great. So drop your pair request in the chat. Drop the pair request in the chat quickly. Just one pair only. One pair only. Drop your pair request in the chat. If there's any pair you want me to analyze, drop it in the chat. One pair only, then we call it a day. All right, guys. Because of our time, okay, we can do that in the next in our next session. Okay. So for now, I think we'll wrap this up for today. All right. So the lessons for today, of course, is very simple. The structure first, then starting from the higher time frame perspective, then you mark out your key order block zones, and lastly, your entries. Right? You can either use risk entry or confirmation entry. And again, I use risk entry at rare zones. I use key entries. So actually, I use risk entry at what's it called? At extreme zones. Okay, these are extreme zones like I mentioned previously. Okay, these are extreme zones. All right, these are extreme zones. Yeah, please, we won't be able to take pairs. Okay, let's do that next in our next session. Okay, let's do that in our next session, please. We've run out of time. We've run out of time. This is 10:11 already, and we're supposed to spend just an hour. Okay. Yeah, please. I'm sorry about that. So again, I was saying something. I take confirmation entry. Sorry, I take risk entry rather at extreme zones. Yes, because like I mentioned earlier, extreme zones have a very high probability of holding. Price would most likely respect extreme zones and give a very massive movement. So I take risk entry. I use risk entry at extreme zone. But then for other zones, okay, I use confirmation entry most of the time. And I'll create a separate video to explain other blocks in detail. This is just an analysis session, not to really break down those core concepts in details, but just to analyze this chart so we can identify ability zones and take our trades when price gets there. Okay, so I think that's it for today. We'll be back again on this by Wednesday at 9:00 a.m. West African time. So until then, trade smart and protect your capital. I'll see you in the next session. Peace out, guys. Please